President Jacob Zuma has waded into South Africa's churning labour crisis with a call for striking miners to return to work and for CEOs to freeze their pay. This comes amid industrial unrest and bloodshed that threatens to derail the nation's economy. For more, we're joined by Claude Besak from Unimix. Claude, I tried my best there.
Well, thank you. I think it was a worthwhile effort. Noted. I struggle with my name myself sometimes.
So Claude, a pay freeze, is that enough, or is it indeed the right move?
I think what we've been waiting for is an acceleration in the involvement of the government in this crisis. So perhaps substantively the notion of a pay freeze is maybe a bit cosmetic and certainly doesn't address the fundamentals of the crisis. But it shows at least that there is some sort of an understanding that salaries and wage issues are getting out of hand, and that it shows that the leadership has to say something that represents some sort of leadership. So
we were asking for this, weren't we? Now we're all complaining that it's not enough.
No, we've been asking for some sort of response by government, at least the right response from government. We've had a cacophony of voices from government, Minister of Mineral Resources hitting on the mines, on the mining companies with one hand, and saying we must stop nationalization on the other hand, and not much more coherence than that. So at least there is an effort. It's high time. It is not enough. This is an incantation,
yes,
and nothing else at this point. Is it going to do the trick? No. Should the different parties make some sort of a gesture commitment to this? I think so. Show that they are indeed willing to come to the table, listen to the president, get around him, and say, well, we are ready to do this, provided that happens. I think that has to happen.
Mark,
but more is needed.
Yeah, Claude, I'd like you to shed some perspective on a phenomenon that I've picked up, drilling down into specific companies.
No pun intended.
And what I've picked up is that companies are managing their wage bills to the extent that oftentimes the aggregate wage bill isn't reflecting wage inflation.
Yeah.
So they're doing things smarter, they're increasing trading densities, whatever it is. So, and frankly, they're firing people or not replacing people. And that, to me, from a number of industry points of view, has been a growing phenomenon and could, in fact, be the case going forward.
Correct. I think they have no choice. The bottom line is that we will say this government, to some extent, and the labor negotiation system, to a larger extent, has allowed wages to get out of hand. And this is not just this year, but it's been going on for 5, 6, 7 years. We have double-digit salary increases through the public sector and the private sector. We've seen what happened in 2006, 2007, when the Mbeki administration tried to control wage inflation on the public sector. We saw what happened. There was a massive strike. And then, surprise, we had Polokwane. So this is highly political, but from an economic fundamentals, it is unsustainable. And the great victory of the workers, at least some of them, are celebrating with that 22% is a Pyrrhic victory. At the end of the day, a lot of these workers are going to live on these wages for very, very long, very, very short time. Because mining companies have no choice but to downside, cut down the more marginal operations, and try to make their existing workforce a lot more productive, so get more bucks out of that particular money. So we're predicting that over the next 2 to 3 years, we are going to see a dramatically smaller mining workforce in this country. And that's going to feed into unemployment. So the longer term question becomes, what does that do to stability, social stability, political stability, and to the ability of government to maintain that manage that extremely fluid and unstable situation.
Viv, I know you've got a question, but just to ask you on this mechanisation issue, I know that it's all easy to say, yes, mines will become more capital intensive, but some mines simply cannot become capital intensive because of the nature of the ores, right? So there's a limit to the extent of mechanisation. There's a limit
to what they can do. They've already sunk a lot of money into those mines. All those mines don't have the kind of life that allows for mechanization. So the risk for those ones is that we're going to see I think we're going to see some sort of consolidation in the mining industry.
You were mentioning the public sector unions. I think that's something that people must consider as well. Even though the mining sector has obviously gotten all the attention, is the public sector unions. I think the public sector, labor disputes that are probably the longer term issue in the country.
Correct.
And we are moving towards a situation in which I think most of the job creation we've seen in the last few years has been from the public sector, which is, of course, is unsustainable.
Indeed, it is unsustainable. I think South Africa is a middle-income country that doesn't have a very deep pocket. It is highly dependent on foreigners funding the budget, and it is unsustainable notion that we can keep on creating public sector employees with that kind of wage inflations at a time when our private sector is shrinking because of the cost pressures that we are seeing being experienced by the economy. If you add the electricity price request, then I think what we have is we have a fundamental issue of global competitiveness, and then we have a fundamental issue of our industrialization model. So I think it's time to realize that some of the policies and the heavy industrialization orientation that has been taken by this government needs to be re-explored.
So if you were to advise government, what would you suggest? We're all being quite critical. They're doing their best under the circumstances. Perhaps, what would you suggest?
Well, I think they need to be a lot tougher with the unions.
But then they'd lose the election.
Well, precisely.
Well,
You've given the answer. No, I think I don't need to say anything further.
Mark?
Yeah, it's interesting. Just to actually translate that to company specific again. You take unsecured lenders like African Bank and Capitec, roughly half of the value of the loans that are extended by those unsecured lenders are to government employees. It's about a third to 35% by number, but value it's about 50%. Yeah. So we're a very socialized economy in that sense.
Indeed, we are. And in fact, our middle class, our rising black middle class, is primarily a government employee middle class. And our model has been to create a black middle class which can transform itself into consumers of financial products and commodities, which we hope we can manufacture. But the bottom line is that what we see is our costs are increasing, which makes the likelihood of South Africa being able to continue manufacturing all these consumables less, which means we're going to import more and more. And we're going to see a lot of what those wage increases are translated into capital getting out, so we can pay for our increasing consumer society. So what do we need to do? I think we need to fundamentally review our cost structure, and we need to fundamentally review our economic development policy.
Different industries then too.
Different industry, different cost models. I don't know how we get there, because politically, as you said, it's going to be very, very difficult. I don't know how you get there. I think as long as, and that's kind of looking at the political situation, as long as the ANC in government is allied with the unions, that is very difficult. So as long as that is in place, we are going to be pushing for heavy industrialization, developmental state solutions, heavy capitalization by the state of all these infrastructure projects, and this kind of big state model.
And that's the rhetoric, more and more state intervention.
Correct.
We're seeing in all the plans, yes.
Correct. And that's going nowhere.